Good evening, all. Ira Epstein with your Spider ETF wrap-up, and we're sitting here now on Tuesday, and this is the 22nd of March, 2021, around 6:36 p.m. Central Time. Now, before I get too far, I'm going to have the live webinar this coming Thursday. You're all invited. I open it at 12:15 p.m. At 12:30 I begin. It's over 20 minutes later. So it's short, it's fast, we cover a lot of ground. How do you get this if you didn't get the invite from me? Because they all went out. If you haven't received one, you're not going to get one. It's really simple to do this. Just take your cursor as we're talking, move it up to the top. A white icon's going to appear, and at that point, click on it, fill out the info. That's your registration form. You'll be instantly sent back your user ID and password, and on your confirmation is an email link. Write to me any of the questions that you want me to cover. I'll do as best as I can. We get loaded with them. But again, it can be spiders, ETFs, stocks, futures markets. Pretty simple. Okay. It's an interesting time. You know, interest rates are making the highest highs they have made since 2018-19. I don't know if you're aware of that. The curve yield keeps narrowing in, yet stocks are on a tear to the upside, and the inflation market, metals, tanking. Not what you would think. Energy prices seems to have stabilized for the moment around the 115 level in the Brent crude, 112 or so in the US WTI. President Biden leaves for Europe, going to meet with the G7, his NATO people. He's going to Poland, and there's going to be a lot that they talk about. Europe seems to be convinced that Putin is going to launch cyber attacks. That's his next move, and if he gets desperate, he will release gas attacks. So the propaganda machines are going. It's interesting because unlike President Trump that would not tell you what he's going to do, President Biden can't wait to say, guess what we're going to do? We're not going to do anything with the military. We'll get them again with our own cyber. I don't think you tell your enemy what you're going to do. That's just my own attitude. This administration has a whole different way of doing things that I am used to. It has nothing to do, by the way, with whether I'm a Democrat, a Republican, or an independent. There's just things that make sense and don't make sense, and I think most of what I've seen doesn't make sense. I mean, Iran's going to be our next buddy. Get serious. All right, Venezuela's my new friend. I guess when you get desperate because you set the wrong energy policy, you make strange bedfellows. When we take it Alibaba, right here, I had no idea. I swear to you, I had no idea when I decided, some people had written, hey, why don't we do this because China's throwing so much money at the market now that they've broken everything. I mean, they took the wealth of these people and drove it away. $300 down to 75. So don't tell me you haven't seen a break like that. It's monstrous. And in that monstrous break, we're finally getting a rally back into a resistance point, back to the 117.32 level. If we take a look here too, did we have an embedded reading? Both numbers here were under 20. So day 1, 2, 3. You got your embedded reading. If the red line closes over 21, I'm looking for the 18-day average as a minimum reaction point. I think pretty close to it right now. That number was 117.32. What's the high this week? 118.24. Now look what happened today. You're up 11%. I was just saying yesterday, I said this is an island bottom. Now you get a market like this. This is now called a runaway gap. You can get an exhaustion gap if you get another gap at those upper spots. That's not what you're at. So you have an island bottom, you get your first runaway gap. Whether it's going to be filled, I can't tell you. Why did this occur? $25 billion buyback has been authorized by the company. That did it, 11% higher, just like that. What's the trend? Up. Higher lows, especially with today's action. But did we have that beforehand? You betcha. Higher lows, higher highs. Where was the market before today's big action happened in relation to the moving averages? It had found them. Where's the resistance? It's the closest of the first resistance point, a key moving average or a Bollinger Band. And if you take a look at the next chart, the Bollinger Band's right here. So I'm looking at the 119.39 level as an important next resistance point in the market. When I take a look at the momentum, I'm overbought. At least I'm not, but the chart is. Overbought, trend up, first objective, pretty stiff resistance between those two numbers, the 100-day average and the upper Bollinger Band. Apple, not to be left behind. Apple's going, I'm back. And it's come straight off what we talked about here. Combination, first off, this 200-day average has been a good bellwether buy, the long-term average in Apple. I had told you that back here, I was saying to investors that the tapes are there, so go listen to them. I said, get your shopping list ready. I think I mentioned Coke, Pepsi, Apple, if my memory's right, I'm old. Came down here and I said, I think those are what people are going to be investors with. Now, there's a difference between an investor and a trader. An investor goes, this is mine, I'm not getting rid of this. I probably have a 5-year window. The trader's looking, well, first of all, I don't know what would have made him buy it there as a trader, but assuming he did, I could see reasons not to be short, but assuming he did, he's looking to come out right away. Different game for the two. You are getting into resistance, by the way, in Apple, between the 100-day average and the upper Bollinger Band, and you're already in stiff resistance in the financials of the 100-day, the 200-day, the 100, and the upper Bollinger Band. I'll be very surprised if we don't get a correction very shortly out of that. That doesn't mean I'm bearish. A correction is not necessarily bearish. Disney, you're going to wake up to news that a Disney park is closed again. COVID. I just got the flash as I'm doing this on my phone. I don't know which one, I didn't read it, but here we go one more time. So just as things are getting good, they're setting the market back. This was not, to the best of my knowledge, built into the price. I have this arrow in the wrong place. Both are pointing up, higher lows, higher highs. First test of the 18-day average. You know the market's got a problem if it gets back through 136.88. So on this bear news, I wouldn't be surprised if the buyers, they'll look to see what the pre-bids are. They might nibble at 138.97 with stops under that number, using that break to come out. Why am I a bit pessimistic? Well, whenever I get up, I throw the name of the charts off. I could care less. This is a pattern that normally stops rallies, a combination of key moving averages and upper Bollinger Band. Now, what happened here in the slow stochastics? Because they embedded. That's bullish, not bearish. Day 1, 2, 3. So until the red line closes under 79, I think on breaks you're going to see, and this according to my enhanced Bollinger Band course. If you want to learn it, just go on the website, www.iraepstein.com, under education. Take the course there. I think you'll like it. I think the traders will become buyers. I don't think they'll buy if you first take out today's high. But on a break, intraday break, they're going to nibble. And if you get under 79 on a close, the last 2 minutes of trade or so, I think they'll bail. Here's another reason I'm not friendly. You're into this heavy-duty resistance. Now, guess who's come to the government asking for federal assistance? My hands out. Semiconductor companies. They're going to be on, I think, Bloomberg first thing in the morning, telling you why they should be given government subsidies to build these factories. Okay. Lower and low, higher high, certainly not a trend, into a lot of resistance and overbought. Home builders, they've been having a rough time, but that chart's not a bad chart. This is sideways action. It's not trend action. You have a lower and low, higher high, but it's also not a falling apart market. It's just doing this. And would you think with all these interest rates going up that this market wouldn't be under pressure? It's not. It can easily turn bearish tomorrow. How? It needs to close under 68.94. If you get that, I contend the pros will go short by the close, looking for the lower band with the stop over today's high. Take out today's high, all bets are off then. On the energy sector, so we have a consistent pattern of lower highs and a lower low, But what the market did is it's found its footing at the 18-day average to go short at 74.04 and have stops that are way up there. You know that's too much money to risk. I wouldn't let my clients do anything like that. A $10 risk on a $70 stock? No. I mean, there is a percentage number you got to look at and say, no, that doesn't make sense. GLD, it's oversold. It does not have the ability now to get the potential buy that I was looking for if today were a good up day. So now the best you can do is if you take out this 181.29 level, you negate the downtrend. Let's talk the bearish side because that's who's got control. Lower highs, lower lows. Until you take that out, the bears are in control. They could be looking at this whole range. It's very oversold. I don't think you're going to attract new money on the short side when you're oversold, but anything's possible. GDX has wanted to be bullish, but it's having a difficult time. The underlying GLD stinks. And this reflects it. This is just the gold in the mine, right? And the miners are going to bring it out for the market value. So 3708 is a real important number because if you take out right here, this 3697, well, you put this market in big trouble. So there's a 9-cent spread there that if you take it out, you're in trouble. Not a downtrend, but the upside is then, poof, gone. Copper, this is where I'm looking for the top. Why shouldn't I? You peaked out at the Bollinger Band there. You peaked out there at the Bollinger Band. You peaked out right here in the Bollinger Band. So I'm supposed to get bullish with each time that it does that? I don't think so. I think I go the other way as a trader and a chart analyst. I'm a good one. And you walk away from that. TLT, higher high, lower low. But that's not what's ruling the market. What's ruling the market is you've been embedded. And when you're embedded, you're looking to be a seller on these rallies. If you're a subscriber of mine in the morning, tell me that's not what I've been telling the clients. Right there, BND, AGG, every one of them that I've been covering. And what did I tell clients today? I would have been saying you were down against the window envelope in the Bollinger Band. For those that are short, today's a short covering day. And I know you're going to say it's gathering momentum, and it is. So if you get a good size rally under the enhanced Bollinger Band course, I'll be looking to put out more sell signals in these markets. There's one caveat to it. Take the course and you see. My subscribers know what I'm saying. UUP, the dollar. Okay. Where I think the buyers show up is on a buy stop tomorrow at 36.38. Did I say 36? 26.38, I'm sorry. 26.38, and I think they're wrong, at 26.24. And if they get lucky, that turns the trend up, and maybe you get to the 26.68. It's a very tight market. You're not playing for a lot there, but remember, traders pick up the percentage, the amount of shares that they're doing, and it can become expensive, so you got to be careful with that. Understood? All right. Well, I'm hoping to see each and every one of you when? Thursday at the live webinar. Remember, if you have a question, you can call my staff, take your cursor, move it up to the top, fill out the form when you see it, and away you go. I'll see you all tomorrow.